City Municipal Water Finance Authority and the New York City Water Board. I'm Max von Holwig, the chairman. I'm a board member of the Water Finance Authority. If we could have a roll call, please.
Max von Holwig.
Here.
Basil Cyrus.
Robert Elburn for Commissioner Sagos.
Alfonso Carney Jr.
Right here.
Adam Freed.
Present.
We have a quorum.
Thank you very much. We have a number of items on the agenda, but the first, as always, is the approval of our minutes from our prior meeting from June of earlier this year. A draft of those minutes is in your board packages. If anyone has any questions about them, entertain those, but if not, could I have a motion to approve the minutes?
So second.
Thank you. Any objection? Hearing none, motion's approved. I think now we come to the heart of the matter. The presentation by management and the independent auditors regarding the audited financial systems of the water and sewer system of the city. With us we have Robert Balducci, who's the authority's comptroller. He's going to present the audited financial statements, and we also have representatives of Marks Paneth, the independent auditors. In particular, we have Warren Ruppel, who is the lead partner on the account. And at this juncture, I'll turn the meeting over to Bob.
Sure, and I'm going to just continue with a little bit of some more introduction. I want to, and everyone knows, but I just want to reintroduce. To the left of me is sitting Olga Chernat, who was our executive director, and I think this is her first joint audit committee that she's joining us with. And then also the manager, the audit manager of Marks Paneth, which is Dan McAfee, who's sitting to the right of Warren. And I also want to, give a special thanks to my staff, Namika Sharma, who's my assistant controller, who's sitting in the back, who works late at night to get these financial statements done, and Milena Sabunia, who's our senior accountant on this credit. With that said, I want to start with going through some metrics on the financial statements. We're going to start with our water and sewer revenue. As you may have noticed, we had a decrease of about $59 million, about 1.5%. It's reflected on page 4 of the management discussion and analysis. That decrease, one of the primary reasons for the decrease there was a decrease in consumption about 1.8% compared to 2016. Our non-operating revenues decreased $47 million, primarily because of our forward purchase agreements. We have these long-term forward purchase agreements. They're high yielding purchase agreements. We get mark-to-market valuations done on them. And basically, our mark-to-market valuations actually gives us a realized value if we were to terminate those agreements, and what would it be worth at that time. The mark-to-market valuations are not really, this is something the accounting standards require us to do. But it's not a true value of what we intend to do in the terms of holding these forward purchase agreements to its term. And interest rates are very sensitive to them. So as interest rates goes up, in 1 year, if the interest rates are low, we have a very big mark-to-market adjustment on it. And if interest rates go and turn around and go up a little bit, we have to reverse that and actually put the new in, and you see the big variations. Another offset to our investment income is arbitrage rebate payments, and I just want to just re-explain what those are. The arbitrage rebate payments are payments that we pay to the IRS. Those are payments that we earn interest above the amount that we're paying on the associated bonds. We're not allowed to do that. It's a no-no. They're tax-exempt bonds, and we have to pay those monies back to the IRS. And we offset our interest income because as the money comes in, we report interest income, and any payments made out to the IRS is an offset to interest income. We paid about $14 million of that. So that's really the big variance. It's the non-cash type of adjustment that was made to interest earnings, and the $14 million payment to the IRS. Continuing along, our operation and maintenance expenses increased about $88 million, 6.8%, and that's primarily due to the costs associated with dredging Flushing Bray. I want to turn to our balance sheet.
Can I pause
Sure.
for a moment?
And any questions during? We could do it during and after, and we could do it during. Okay.
We'd seen a would you prefer to wait after?
No, that's fine, I think.
No, we could do it-
That's why we give it
We've seen
take.
a decrease in operating expenses, particularly as the OpEx was being implemented. Is this a kind of exception to that, given the expenses with Flushing Bay? Or is this a reversal of a trend that you'd anticipate to be recurring for
No,
years?
so our past decrease in operating expenses were for a number of reasons. I think the one from last year was because we had wage accruals that we had settlements on, and we had posted the expense for. We took out those accruals because they were no longer needed, and once we reversed the accrual, it's actually a negative expense. So we reported it in that period to catch up, and that caused somewhat of a large decrease last year. That's not normal, you know what I mean? Our normal is what we pay during the year. This is just, $88 million that, of an increase, and a lot of it is just this one-time, dredging, cost that we have for Flushing Bay. So that's what really caused that expense. Everything else is relatively comparable from last year. Okay. Any more, do we want to go on to we can go on to the balance sheet and talk about what we issued in bonds? Okay, so on page 39, you can see that we issued $2.8 billion in bonds. Of the $2.8 billion, $1.1 billion was used for refunding. Our gross savings on the refunding was approximately $204 million. In addition, the Water Authority also legally defeased approximately $782 million using current revenues. And we obtained a gross debt service savings of about $1.5 billion on that defeasance. The authority transferred $1.5 billion of proceeds to the city for capital costs. And our restricted cash and cash equivalents was approximately $2.7 billion. Is there anything on the balance sheet we want to discuss? Our assets, our liabilities?
No, I have nothing.
Our total, our capital assets, what we have for depreciable assets, we had we had an increase to our construction work in progress of approximately $1.5 billion, and of that, we recognized $929 million of depreciation, so we have a net increase of capital assets of $470 million. Besides these metrics, just talking about some of the accounting standards and, keeping up with the times, per se. There was one on, and we discussed it the last time, on the OPEB, which is the other than pension expense benefits. And when I talk about pensions and OPEB, I just want to remind everybody that this is an extremely low number for us, because we only have 15 employees, and for other governments, it's an extremely large number. It's something that, a lot of the rating agencies and everyone cares about. But we did implement GASB 75, which actually overrode what we used to use, which is GASB 45 on OPEB. And we restated, you'll see some columns on the financial statements that's restated. It's not for a bad thing, it's just for an implementation of a standard. I think it had a $400 and some odd thousand effect. There's a lot of arguments saying that, we could have done it and not do it, and not report it. But I think that, a few years ago, we did the GASB 68, which is $1 million effect, and I don't know how I could justify not restating, for 479 as opposed to the 1 million. And plus, we just want to show everybody that we were able to do it.
Complete transparency.
And you can see a lot of the notes on these financial statements is dedicated to pension and OPEB. Those are just required note disclosures that, our true, business here is the bond issuance and the revenue collection, and that $2 million worth of OPEB and pension that we spend so much time on is not very material to these financial statements. So with that said, is there any questions on the financial statements? Because I would like to turn it over to Warren. And then also, we also wanted to talk a little bit of some housekeeping, what we need to do to finalize this. And I'll turn it over to Warren to accept the management items.
Okay, thanks, Bob.
Okay.
I'm just going to go through some required communications that we have under our ordering standards. Then also we have a draft of management letter that we're going to take a look at with The required communications are in the second tab of the material that was passed out. It's also the same material that was emailed to you. So if you just turn to the third page in, which is numbered page 2. I'll just remind the committee that we perform the audit in accordance with 2 sets of auditing standards, general accepted auditing standards and government auditing standards. Government auditing standards because of the federal awards that you have. You're part of the city's single audit, which is the audit of most of the city's federal programs, but to support that, we do the audit of your financial statements in accordance with government auditing standards. We're substantially completed with the audit. There are some open items that are listed in item 1. Most of them they're really pretty typical of this time of year. I think we actually have the legal letter from the city law department, so that's been crossed off the list. We'll be getting a representation letter, and also need approval of this committee, and then we'll be able to issue the financial statements. The timing for the audit is laid out at the table at the bottom of this page. Again, this meeting is a few days later than our meeting last year. We look to issue the financial statements in final form very shortly after this meeting, driven really by the city's. New York City needs to issue its financial statements by October 31st, so we have to be signed off with this ahead of time. I expect to be well ahead of October 31st. Item number 3, we always point out the financial statements of management's responsibility, and our responsibility is to perform an audit in accordance with the auditing standards. Bob and his team are very good at preparing the financial statements. They really take charge of it. We have almost no effort in terms of the financial statement preparation. We do have some conversations during the year on applying new accounting standards, et cetera. Bob mentioned whether to restate prior year statements or not. That was something that we discussed. So they really do a great job in preparing the financials. In terms of accounting principles, Bob already mentioned GASB 75, so I'm not going to spend any more time on that. Had a relatively small impact on the financial statements. Item 5, we're required to discuss significant estimates and judgments that are inherent in the financial statements. So there are a few for this entity. The first being the allowance for uncollectible receivables. You can see this year's allowance is $414 million compared to $411 million last year. And there's a methodology, if you look on the following page, where there are certain percentages of both billed and unbilled receivables that are used to calculate the allowance based upon payment activity over the last couple of years. So, and there's also, beyond this, there's also verifying that these percentages going back are actually, good, that they shouldn't be adjusted. So we take a look at that during the course of the audit. We look at subsequent cash collections, et cetera, and we're comfortable that the reserves the allowances that are recorded here are reasonable. A little less exciting is the capitalization of utility plant and service. Theoretically, the estimated useful lives that you're depreciating your assets over are an estimate. So we look at those lives and make sure that we're comfortable with those, and we had no issues with any of the estimated lives that are being used. Pollution remediation obligations, there's a small decrease in the estimate for the liability for potential pollution remediation of $30 million for this year compared to $32 million last year. Again, through various inquiries and looking at the analysis that's prepared for this estimate, and we found that to be reasonable. Related to some of your bonds, you have interest rate swap agreements. Those are considered derivatives, and they have various prescribed accounting procedures for derivatives. They qualify as a hedging activity, which means that the offset to the fair value of the swap can be reported as a deferred inflow or outflow of resources, basically putting it on your balance sheet as opposed to putting it through operations. So the fair value that's recorded is a negative $100 million, and we review the factors that go into the valuation, also look at the valuation work itself, and we've concluded that that number is reasonable. And then also for the pension benefits, and I guess somewhat on the disclosures of the OPEB benefits, we take a look at those calculations are really done by the actuary's office, and a piece of the cost-sharing multi-employer plans that on the pension side, that the water that relates to the water's employees, which is very small, there's only a handful of employees, that's picked up as a liability on your books. So that's theoretically an estimate, so that's what we're discussing here. Again, that's had no issues with any of the actuarial assumptions, et cetera, that he used to calculate that. Item 6, we had no adjusting entries to the financial statements and no adjustments that were not recorded because they were deemed to be immaterial. For this size entity and for some of the complexities of items involved, that's really very indicative that the books are kept very cleanly and very appropriately. You know, there's a lot of moving parts to this organization, so having no adjustments is really very commendable.
Congratulations.
There were no significant issues discussed. I mentioned before, routine discussions during the course of the year about various accounting matters. We had no disagreements with management or difficulties in performing the audit. We didn't detect any fraud or legal activities to call to your attention. In terms of internal controls, we had none that rose to the level of significant deficiencies or material weaknesses in internal controls, so there's nothing to report at that level. We generally look at our internal control comments in two buckets, one being related to accounting and the financial statements itself, and the other related to technology. On the accounting financial record side, we have no comments, and on the technology side, we do have a few comments, some left over from prior years, some that are new, that we'll take a look at in a couple of minutes. We're not aware of any consultation with other accountants. We can confirm that we're independent. And the other future deliverable is our report on compliance with investment guidelines, which I also will be looking at a draft of that as well.
Before you go on,
Yeah.
maybe go back to item 9, the fraud of likely illegal acts.
Yeah.
As you say, there are a lot of moving parts here, a lot of moving parts. Do you do anything differently because of that factor than you would with other clients, where the activity that could lead to fraud is probably diminished, whereas here, the opportunity for fraud, I suppose, is going to be greater?
Yeah, I mean, we make certain inquiries of accounting and other
Right.
folks, and made inquiries of you folks during our pre-audit.
Sure.
But we really, for that type of fraud, where it wouldn't necessarily be material to the financial statements, we really
Got it.
look at the internal controls that are in place.
Got it.
To get some comfort that the controls are adequate to.
Reasonably adequate to prevent any material impact.
Right, and a lot of that hinges on segregation of duties to make sure that
Yeah.
whoever's preparing something is someone else is independently reviewing and documenting that review, et cetera.
Okay, terrific.
Also provided drafts of the representation letter that we'll be asking management to sign. It's one of the open items to the audit. We're required to share significant correspondence that we have with the audit committee, so we'll bring that to your attention. Any other questions before I move on? So tab number 3 is it's a draft of our management letter. And again, as I mentioned, it includes really exclusively some technology comments. It's still in draft because just work leading up to these comments, there's a time period where the management technology folks need to respond, so we want to include management's responses in the letter, so I'm sure those will be distributed to the committee at a later time.
The next meeting.
At the next meeting. But we wanted to give you a flavor of what some of the things that were in this year's management letter. So there's 3, it's separated into 3 exhibits. It's a little hard to see because there's a lot of verbiage here, but The first exhibit has new recommendations. Second exhibit has recommendations from the prior year that require further attention. And then the third exhibit is a recommendation that has been resolved. So I'm not a technology person, but I'll try to convey these
Good luck.
to the best of my ability and understanding, which I will be at a level that, you know, you'd find
We'll understand.
useful. Right. We can be on the same page in terms of these. The hot topic, or, you know, that our technology folks find is in cybersecurity area. That's what everyone is really talking about and focusing on. So there's two things to take away from this. One is that we're not really doing a cybersecurity audit per se. That's not, we're really doing these technology procedures to give us comfort that the reports and other information that come out of your financial systems are done in such a way that we can have some reliance on those for our audit procedures. So that's really the driver for that. But that being said, the technology folks come out and, you know, they did take a look at some of the cybersecurity plans and controls that you have in place, and they've laid those out at the table here. They compare it to the 2016 status with the current status, and you can see it's fairly consistent from year to year, and that really generates some of the comments that are included in the exhibits that I mentioned. So, just to go through the first exhibit, the first recommendation is to develop a management steering committee. This is a comment that I've seen more and more from our technology area, where having a group that's responsible to kind of oversee at a, you know, at a higher level the technology function of the organizations is we think is important, and to look at overall policies and procedures related to technology. The second is more of a housekeeping item on some outdated server operating systems, where this typically happens where a server's software will no longer be supported by the software provider, so need to update that. So that's something that I'm sure will be addressed. And then finally, this is something that we've been recommending to essentially all of our clients to consider whether you should obtain cybersecurity insurance. Being a governmental entity, sometimes entities make decisions to be self-insured versus non-self-insured, so that's something for you to think about. But we wanted to, since we do provide this recommendation to a lot of our clients, we wanted it to be something that we brought to your attention as well.
Is it expensive?
Probably. I mean, it all depends on the size of the
On size,
operation.
right.
Obviously, you have a fairly significant
Yeah.
IT function, so I couldn't give you, you know, an estimate off the top
Oh, no,
of
I
my
wasn't
head,
looking for
but
that,
it's
just
something-
sort of ballpark, expensive, not expensive.
I'd say more
expensive.
expensive. Yeah.
Okay.
More expensive than not.
Not as expensive as not having it in something.
If something goes really wrong,
Customer.
okay.
It's the regret avoidance insurance.
Right. And, you know, it's the, you know, the revenue stream of the organization really depends on technology, so
Yeah, really.
technology is an important item for the organization.
Warren, do you know how common is it for governments to purchase cyber insurance?
You know, like, I would say, I don't believe the city of New York itself has cybersecurity
Right.
insurance, but if you get to, you know, component units such as yourself that kind of operate more independently, then it's something that they consider. And I can't swear that there's some of my clients that have it, but, you know, it's something that they are considering obtaining.
Okay, thank you.
Who provides it? I mean, how many providers?
Well,
The three of them.
Are
They
there
have
three?
a list here.
American,
Okay,
yeah,
I see.
G, Chubb, and
Got 'em.
XO.
I mean, they're probably still figuring out how to assess this
Underwrite.
risk and price it,
Right.
which is one reason why it's probably as
Right.
expensive as it is.
Right. And I mean, there's others. Our technology folks like to just give some options, but certainly there's, you know, any number of insurance companies that could
It's
provide.
it's definitely worth looking at, thank you.
Exhibit 2, which is next, has some prior year recommendations that are still being addressed. A lot of these relate to account access, network access. I'm not gonna go through all the details of these, but they really focus on password management, access to applications, and access to networks, and to have policies and procedures in place to make sure that only the people that need to have access to certain applications and the network have that access, and folks that don't do not. And then item 7 is a little bit different. That relates to business continuity and disaster planning. It's really, you have various activity or plans in place. I guess our recommendation is to have that more kind of centralized, and have one business continuity plan that's developed and maintained for the organization. And a lot of that comes down to, we used to call them disaster recovery plans, now it's more business continuity. And a lot of those decisions are figuring out which functions how long you could not survive, but how long it would be convenient. It's reasonable for certain things to be out of service. So certain things, if you didn't have it for 2 weeks, it might not be a big deal. Certain things, if you didn't have it for 2 days, it might be a big deal. So going through that and going through your various functions and what you use IT for, and coming up with a strategy to address those risks is really what this comment is about.
Ms. Chernat's question again. Do your government clients generally have these disaster recovery plans, books?
Yeah, everyone
Procedures.
has something. Like, a lot of times it's not complete, and we'll make recommendations such as here to kind of finalize it, formalize it, and finalize it. But yeah, it's something that virtually all organizations that I audit
Okay.
have in
Have.
place in
Okay.
some form or another. And then there's one comment, Exhibit 3, remote permissions. This is where the comment really related to the IT folks being able to go into users' computers without them knowing it. So we recommended that a protocol be put into place where the user would know that their computer is being accessed.
That it is being accessed, or that we have the capability to access it?
You have the capability. The comment and the solution was to make sure that the individual, your
Right, my
computer, you
computer,
would know
my desktop.
if IT comes and accesses your computer, you would know that.
I'd know that. All right.
Would you know while it's happening or after the fact?
You know while it's happening.
That's interesting. I never knew that. I mean, I never knew that there was a question. It's whether I guess it's a privacy question, but it can't be on a business computer. But why would you want the user to know at that moment that somebody's actually invaded their cyberspace?
Well, what you don't want, let's say you're working on sensitive information.
Sure.
You have all your passwords listed on a screen.
Of course.
And
Of course. Okay.
somebody in the help desk decides to
Got it.
access your computer. So that wouldn't be a good thing.
I agree.
You're thinking that they're uncovering nefarious affairs on the first.
On the
first
first.
The cynic in the group.
The other side.
Yeah.
That's exactly what I was thinking.
Goes both ways, so.
Yeah.
That's fine.
Thank you.
You're welcome. Any other questions on these? Okay, tab 4 of the financial statements, Bob went through some of the highlights. I'll just point out in our independent auditors report, as I said, it's a draft of an unmodified opinion. Since you did restate the prior year financial statements for the OPEB statement, we have an emphasis of a matter paragraph that just calls to your attention to the fact that you did do that restatement, which is very typical for when you do something like that.
Well, that last sentence is the one you want to see. Your opinion is not modified with
Yeah,
respect to this matter.
right.
Thank
Just
you.
it's just as emphasis of the matter is under auditing standards that came into play a number of years ago. It's called that. It's just something to call the reader's attention to, as opposed to changing your opinion. So it just makes that clear. So the final two things I have are in tabs 5 and 6. Tab 5 is a draft of a report on your investment compliance. So as part of reporting that you do to the state, there's an investment report. This will become part of that investment report. It basically says, for all the investment transactions that we looked at during the course of the audit, we didn't find any that were outside of your investment guidelines. So this is to be considered a clean report. And then in tab 6, I mentioned that the auditing, that our audit is done in accordance with government auditing standards. So government auditing standards has an additional report that's issued on internal control over financial reporting and compliance and other matters that could be material to the financial statements. So because of that, there's a different opinion on the financial statements, it's still unmodified, but it refers to government auditing standards, and then it has a last paragraph which refers to the other report I just mentioned. And then the draft of the other report here is included on internal control over financial reporting and compliance with other matters that material to financial statements. We had no findings that are reported in here.
I see. So this letter actually gives us a clean outcome, but then refers to the other letter, which follows it. I'm sorry, it took me a while to catch up.
Yeah, no, that's, yeah. The other letter specifically is on internal control and compliance with other matters. If we had any significant deficiencies or material weaknesses, they would have to be included in this letter. Since we just have really more best practice recommendations that don't rise to that level, then we don't have to report them in this report.
And are we do we respond to the best practice recommendations?
Well, so, yeah, so in our next meeting for,
I'm sorry, you just said that, didn't you?
yeah, that's okay. I'm sorry. So I just wanted some housekeeping. As Warren mentioned, we have to sign the representation letter. That's part of the professional standards, and the audit opinion could be signed off as of that date. Our joint audit committee is going to make a recommendation to our boards, right? So we can't do that until both boards actually do the approval. So that will happen for the Water Authority today, and I believe on Monday that will happen for the Water Board. The city is going to meet, I believe, on Tuesday for its CAFR, and we're combined in the city's CAFR. So we want to just ensure that we'll get it out before Tuesday, because they cannot date their opinion after no component unit can date their opinion after the city dates theirs. So we just gotta we'll keep in line and get them what they need.
Just for you, we're gonna meet at 8 o'clock on Monday morning. Just for you.
We so appreciate it.
Make sure you-
And I'll be there.
Are you coming?
Yes. I'll be there with the representation letter behind Joe to sign it and fax it over. So.
At 8:05, he'll be emailing me.
Yeah.
Sign.
If there's any questions before we move along and turn it back over to Max.
Well, there is in the rest of the world the opportunity to meet with the independent auditors separately from management. That doesn't exist here. So I guess I've been trying to think of some way to have that opportunity that then meets the recorded meeting
Open meetings.
rule.
Right.
Open meetings rule. And I just can't think of anything.
I have a suggestion, because I hear this a few times. So, we have this nice contact list with everyone's pictures. Just like me, Warren picks up the phone all the time. Feel free to call him, right? You can call him at any time.
And I'd love to do that. I just didn't want to do it without saying to management that.
I have to tell you that when, being 13 years in audit, I always used to love to work with the line of staff folks. And audit, Warren's group, they don't come to me to anything. I say go speak to the accountants directly, because we think that we have a system in place that we follow strictly, and we're confident with that system, and they do their job.
And it's a gratuitous comment, but I mean it. You're doing a terrific job.
Right.
So I just want to stick with the protocol that says, you know, we should be able to check off that box. That's all I'm trying to do.
Call me, call Warren,
Okay.
call Dan.
Right.
We're so open that you have that ability to
More
do that.
information than I want to hear.
And that's on public record.
Okay, thank you.
Any other questions?
No, sir.
No, but if I may, this was my first time going through preparation of financial statements, and I would like to second, I think Al's sentiment that I think both teams did a great job, both Mark Panis and our internal team.
I certainly second that. I think we're probably ready then to move with a resolution to recommend to the authority's board of directors and to the water board acceptance of the auditor's report and the issuance of the financial statements. The only caveat is that they could still be amended to reflect non-material changes that are acceptable to both the comptroller of the authority and of course the auditors. Any additional questions? Hearing none, could I have a resolution?
So moved.
Second.
Any further discussion? Objection? Hearing none, the resolution is approved. Thanks very much. A couple more housekeeping items. We need a resolution pursuant to the Audit Committee Charter. We need to require, every year we annually review and approve our charter or make recommended changes. No changes are proposed this year. So if I could have a resolution to approve our current charter?
So moved.
Any discussion? Objection? Hearing none. Motion is passed. And lastly, it's just a review item, not a resolution item. Attached in your packages is an audit committee schedule of dates that provides information on items that are discussed at the annual meetings of the audit committee. Again, no changes are proposed. Any questions about those? Hearing none. That is taken care of. No further business. If not, I'll entertain a motion to adjourn.
So moved.
Second.
Discussion? Objection? Hearing none, we are adjourned.